So first of all, this is a very important point that there's already beginning to come through in some of the previous talks, and this session is about diversity in the banking system. The UK is out of line with all our international competitors by having a very monolithic banking system. It's not just that we haven't got very many banks, they're all sort of the same. The big banks, they're all commercial banks that are focused on the same sorts of customers and the same sorts of deals. This just shows you that Germany has a three sort of pillar system with cooperative and public savings banks and commercial banks. France is roughly evenly split between cooperatives and commercial banks. The UK is unusual. But even worse than that, and this is a new infographic that hopefully is being tweeted out and put on Facebook as we speak, we don't have local banks. And this comparison is really quite stark. So if you cut that on whether the bank is a subnational bank serving a particular market, the US is very interesting, 34%. The US has a vibrant system of local for-profit commercial banks, but they serve a particular area. Germany we've already heard about, but Canada, Brazil, they have significant proportions of their banking systems are in local banks. The UK, only 3%. So this is a whole part, very, very vital part of our banking fabric, simply missing from the UK scene. How could we change that? How could we introduce more diversity? Well, there are various forms of banks other than the big commercial banks we're used to, the big high street banks. You have cooperative and mutual banks. Well, we do have building societies, we do have the co-op, we have the Airdrie savings banks, but this is a sector that really we would like to grow. The credit union sector, we have this, again, very small, significantly bigger in other countries and plays a significant economic role. Gradual liberalisation and growth in credit unions needs to be much quicker. Savings banks, an intriguing one, and I'm going to come back at the end on that. Community development finance institutions, you may or may not have heard of. These are specialist loan funds that lend in areas that are ignored by other banks. We need more of those. But also, there are new competitors, challengers coming in at the local level. And I know perhaps Fiona might talk a little bit about what's happening there. Why is this important? Why do we need to have local stakeholder banks? You've heard something of this. And I'm summarising quite a lot of research here, so you're going to have to kind of take my word for it when I make these assertions, but it is all in the research if you look it up on our website. They outperform on SME lending. They keep capital within regions. So, and the point explained by David very well, so I won't drum on about it. But they also maintain larger branch networks, or rather crucially, they maintain branches in remote areas which would otherwise not be served at all, because they have a social purpose to them, you see. They have more prudent balance sheets. Yes, maybe they are boring, but I think we've learned in 2008 that's not a bad thing in banking, in high street banking at least. And because of that, they were very resistant during the crisis. So we looked across all sorts of countries. It wasn't just the savings banks, not the Landesbank regional bank, the German savings banks that didn't require any bailout. Cooperative banks, local banks across Europe, in general fared very well. There were exceptions, don't have time to go into that, but the Spanish cajas were more of an exception than a rule, I would say, in local banking. Much better quality lending due to the local knowledge that David actually talked about. And this next point I'm going to demonstrate. They've carried on lending at the point that the big commercial banks have dramatically reined in their credit provision. So here's Switzerland. Switzerland also has regionally focused banks. They're called the canton banks. I'm going to show you a series of three charts now that illustrates this. The red line is UBS and Credit Suisse in Switzerland, the large commercial banks. Huge reduction in the stock of lending to the real economy. What's the blue line? Well, that's their local banks, steadily increasing credit since the 2008 crisis. Let's look at Germany. Even more stark. Large commercial banks dramatically reduced their lending. That's Deutsche Bank and Co. But look at the blue line. There are the Sparkassen, there are the local cooperative banks, steadily increasing credit throughout the recession to SMEs and to individuals for real economy purposes. Let's look at the UK. There's the large commercial banks, reduction in lending, over 20% since the start of the crisis. We don't have the blue line. That's the problem we need to address. And my final slide, which I've got the red card, but I will whip through. We will talk about some of these more. I just want to pick out one, because I said, well, I'll come back to the idea of local savings banks. We believe that instead of a fire sale of RBS, or even an eventual reprivatisation of RBS, We should have a serious think about keeping it in public ownership and modelling it into a system, a network of local banks with a public interest mandate based on the Sparkassen system. And I think overall, as taxpayers, as citizens, as customers, we'd be better off that way. Thanks very much.